The waning competitive intensity due to the departure of Jet Airways has led to a significant improvement in yield within the industry, thus helping the incumbents post strong earnings in Q4 FY19. Further decline in fuel cost in the quarter gone by has also helped companies in further expanding their margins. Let's do a three-point analysis of the Q4 results of the biggest Indian airline, Interglobe Aviation, the parent company of Indigo. 1. What are the key highlights of Q4 results? A strong set of numbers for Q4. Year-on-year net revenue saw a significant growth driven by passenger revenue uptick. Now, operating profitability also expanded significantly. Now, net revenue from operations jumped up over 35% year-on-year, driven by a 25% growth in revenue passenger per kilometer as well. Now, what came as a positive surprise is the improvement in yield, which grew 11.8%. Now, with significant improvement in yield and drop in the fuel cost as well, the company posted a year-on-year growth of over 81% in EBITDA, and the EBITDA margin also swelled up over 650 basis points in Q4. The load factor at 86% is lower than that of the same quarter last year, primarily due to a major capacity addition by the carrier. 2. What's the outlook on the company? Well, the escalation trade war between the US and China, coupled with geopolitical tensions, have actually led to a rise in volatility in oil prices, leading to a spike in the past few months. Now, we need to carefully monitor the oil price graph as the sensitivity of Indigo's profitability is quite high. Now, in the 3 months to March, the company also added 9 aircraft to its fleet, taking the fleet count to 217. Now, the company has also placed huge investment orders, and the deliveries of which will help Indigo retain its leadership position in the industry as well. Now, most of these additions would be of the fuel-efficient A320neo aircraft. Now, the airline has also recently got into a code-share agreement with Turkish Airline. Now, it continues to focus on expanding its footprint in the long-haul international market as well. 3. What should be investors' strategy now? Now, there is an expectation of improvement in yield and the industry dynamics going forward. Now, the stock has witnessed a significant up move already, and we believe that Indigo has all the right ingredients that are required to retain the leadership position in the Indian aviation sector. Now, one must, however, carefully monitor the oil prices and passenger growth of the industry. Investors could look at accumulating the stock in a staggered manner.